So here's a question for you. Have you ever noticed that it actually costs money to be poor? I mean, it sounds like a complete paradox, right? But this isn't just some abstract philosophical idea. It is a hard, mathematical reality that is built right into the architecture of our financial institutions. And really, it's the central theme of today's explainer. We're going to climb the ladder of wealth level by level, and we'll watch exactly how the system transforms from this automated punisher into a bespoke, flexible friend. But to understand that very bottom level, we have to look at a very specific and honestly often terrifying number: $35. Yep, $35. This is the standard overdraft fee at most financial institutions. And I want you to really picture this visceral, super stressful scenario. You're at a gas station, you go to use your debit card, and it declines. So you try it again, and it declines again. Now there's a line forming behind you. People are staring, and you are frantically doing arithmetic in your head, trying to calculate, wait, did that transfer clear yesterday? But you just can't finish the math fast enough. Everyone is watching you. This right here, this is what financial stress actually feels like in the real world. Which brings us right to our very first tier, the cost of survival. So, going back to our video game analogy, extreme poverty is essentially playing on ultra hard mode. You've got no skills, no cheats, no equipment. We're talking about trying to survive on less than $2.15 a day. Think about that for a second. That is literally less than what you probably spent on your morning coffee today. In this tier, you aren't just short on cash, you completely lack access to basic fundamentals like clean water, proper nutrition, and healthcare. It is basically like trying to win a game of Monopoly when you start with absolutely zero money and no properties. And the real kicker? Every single time you pass go, instead of collecting your $200, you just get handed another bill. Because when you have insufficient resources, the mere act of existing generates more costs. And the banking system, it doesn't scale its response to the severity of your situation at all. And you really have to notice the sheer automated indifference of the whole thing. Banks will call this overdraft protection. They cover that gas station transaction for you so you aren't embarrassed in front of the line, but then they slap you with a $35 charge for the service. If 3 tiny little charges happen to process while your account is in the negative, boom, that's $105 in fees. In fact, in just one single recent year, banks collected over $7 billion in overdraft fees. $7 billion! And the vast majority of that mountain of money, it came from a tiny, tiny percentage of chronically overdrawn accounts. There's this quote from an observer that I think just perfectly hits the nail on the head. They said, the same people paying repeatedly for the privilege of being poor in a system that charges for it. At level 1 and level 2 of wealth, where you're hovering right around a zero or super low balance, you aren't really treated as a customer. You're just a small number. The bank's computer system doesn't know or care that your paycheck got delayed by a day. It just knows your balance is negative. To them, you are simply a cost that they are trying to recover. There's absolutely no human relationship here. It's just a cold, automated, unyielding algorithm. Okay, let's keep moving up the ladder. Here is our next tier, the middle class squeeze. So, in gaming terms, the everyday, hardworking folks in this tier, we're talking teachers, tradespeople, nurses, they are absolute experts at min-maxing their limited resources. They have to make the most perfectly optimal choices just to maintain their stability. But as you min-max your way to that stability, the system starts to notice. When your direct deposits become consistent at level 3, the algorithm reacts. Suddenly, you get approved for a loan at 11% instead of a punishing 24%. And then, by level 4, once you show consistent savings, the bank's risk models completely shift in your favor. Your loan rate drops all the way down to 6.8%. The bank's view of you magically transforms from indifferent to valuable. See, you aren't paying for the privilege of banking anymore. The system is finally slowly tilting in your favor. But you know, it's a fragile piece. The middle class is kind of this Goldilocks zone. You're not too rich, but you're not too poor. You might be able to afford a new smartphone every couple of years or take a nice little vacation, but you absolutely cannot take wild, unnecessary risks. If you decide to fund some crazy business idea and it fails, that could instantly wipe out your cushion and land you right back to eating instant ramen for dinner every night. It's a comfortable life for sure, but a very cautious one. Just look at how the rules shift right in front of us. Down at the lower levels, if you want a credit card, you literally have to give the bank your own money as collateral, just so they can lend it back to you and charge you interest. I mean, that's crazy. But as you hit level 4, the bank will just extend your credit limit from $4,000 to $14,000 without you even asking for it. Why? Simply because your history proves that you don't actually need the money. And this is where wealth starts compounding. Lending to you has mathematically become a safe bet. You end up paying less for the exact same things, which leaves more capital in your hands to grow. Moving right along, let's step into our third tier, the affluent and preferred. Now at this stage, your financial cushion stops feeling like a safety net and honestly starts feeling more like a luxury mattress. You might not be swimming in a vault of gold coins just yet, but you are comfortably floating in a very nice pool of financial security. Once you cross that $150,000 asset mark, the entire service model of the bank evolves. Those cold, unyielding algorithms we talked about, they get replaced by actual human beings. You get put into priority queues. Hold times basically vanish. The person who answers the phone when you call is senior enough to actually waive fees or fix a complicated problem right on the spot. You might even get a dedicated general banker, like a named human contact who actually knows your account. And they are super attentive because their own job performance relies on keeping your valuable account inside their building. Then, when you hit high net worth, which is usually defined as having between $500,000 and $1 million in assets, the whole paradigm shifts entirely. You actually stop visiting the bank. Instead, the bank comes to you. They start offering you what they call wealth management. They stop trying to sell you basic consumer products and instead start consulting you on your entire financial life. We're talking taxes, estates, big investments. And why do they do this? So they can capture everything you do under their umbrella. The motivation is totally commercial, of course, but the experience becomes incredibly personalized. At this point, you are no longer just a customer. You are an actual asset to the bank. And finally, we step into the highest tier. Here is when the rules bend. When we start talking about multimillionaires and billionaires, it's like a Pokemon evolution, honestly. Wealth takes on an entirely new form at this level. You start making decisions based purely on passion, not out of necessity. And to truly grasp this tier, just look at this mind-bending number, 3,000. If a millionaire's wealth is like owning a fancy sports car, a billionaire owns the entire racetrack. A billion is 1,000 million. Think about it this way. If you somehow manage to spend $1,000 every single day of your life, which is actually incredibly hard to do, it would still take you nearly 3,000 years to deplete $1 billion. Just let that sink in for a second. It is a scale of resources that literally breaks normal human arithmetic. So how exactly does a bank treat a very high net worth individual? We're talking $5 million plus here. Well, it becomes this incredibly whisper-quiet world. The products they offer you, you won't find them advertised on their website. The interest rates aren't posted on any brightly lit board in the lobby. If you want a mortgage, the bank will aggressively compete to give you a rate that is far lower than what the middle class gets, simply because you represent zero risk to them. You take meetings in very nice private rooms with specialized teams. And those standard waiting periods, forget about it. A 2-week approval process for a normal, everyday person gets handled internally in about 48 hours for you, simply because the staff has been told exactly whose account they are dealing with. Because it all boils down to this one reality. Listen to this. Banks do not break laws for wealthy clients. What they do is exercise every legal degree of discretion. The rules don't completely disappear, but they become infinitely flexible. Any fees that technically apply to you are routinely waived before you even have to ask. Exceptions to the rules are approved before a manager is even consulted. That rigid, automated $35 overdraft system that punishes people down at level 1, that has been entirely replaced by a dedicated human team whose entire job is oriented toward figuring out how to say yes to you. This right here is the ultimate systemic contrast of this whole financial video game we've been talking about. Down at level 1, when you're doing panicked math at a gas station counter, you are simply a cost the bank punishes with automated fees. But up at level 8, in the world of private banking, you are a relationship. The institution's connection with you is a literal line item in someone's annual performance review. Losing you as a client would actually damage people's careers, and that, my friends, is a completely different kind of power. So, which leaves us with this final thought for today's explainer. When you step back and look at how drastically the rules of the game change from level 1 all the way up to level 8, you really have to ask yourself, is money just a simple tool we use to buy things? Or is it actually the ultimate key to unlocking a system that was fundamentally designed to serve you? Because, as we've seen, the more you have, the cheaper it gets to live, and the more the rules just seem to bend in your favor. Thank you so much for joining me today and exploring